Welcome, crypto fam, to the #1 daily Bitcoin pod. Bitcoin's pumping. We were just above 101. We're still above $100,000 on the day. Good to have everyone here with us in today's show. I'll be breaking down the latest Bitcoin technical analysis. Also breaking news, Argentina's President Javier Milei plans to allow Bitcoin payments in 2025, as well as more breaking news. Publicly traded mining company Riot buys an additional 5,100 Bitcoin for $510 million. Also, Texas lawmaker proposes a bill to establish a strategic Bitcoin reserve, as well as the Trump team seeks ways to slim or abolish the banking regulators. We'll also be discussing BlackRock says 1 to 2% is a reasonable Bitcoin portfolio allocation, as well as Bitcoin can hit 160,000 here soon. I'll be breaking down the timeline. And speaking of bullish predictions, we also have Michael Saylor insisting and doubling down the Bitcoin will reach 13 million per coin in his latest interview. We'll also be taking a look at the overall crypto market. All this plus so much more in today's show. Let's get this show on the road. If you're new to the channel, important to smash the likes, then hit the bell icon and turn on all notifications. That way you actually get notified when I go live. Like today, I'm going live extra early and you wouldn't have known unless you got notified. And with that being shared, let's, I'm your host, JV. It's December 13, 2024. Let's kick it off with our market watch as we do each and every day. The market's correcting. It's ironic. We were just 101 a few minutes ago, so we're currently in a correction, but very minuscule, maintaining 100,000. It seems we have retested 100,000 like 1,000 times in the past week. It's been crazy. It's like we're 101, 102, back down to 99, back to 100, retesting to where we're currently at. We have Cardano, Tron, and most of the alts currently correcting and in the red. Checking out coinmarketcap.com. The current crypto market cap sits just shy of $3.6 trillion. The Bitcoin market cap is $1.983 trillion. The other day we were above 2, so it pulled back just a little bit. We have 184 billion of volume past 24 hours, with the Bitcoin dominance currently 55.1% and the Ether dominance 13% even. And checking out top 100 crypto gainers past 24 hours, we got Virtual leading the pack up 22%, followed by Core up 11%, followed by Undo up 6%. Which alts, if any, are you bullish on for the bull? Holla at your boy and I'll read your comments out loud here shortly. And checking out the crypto bubbles, we'll get a visual perspective on the day. Womp womp. Majority of the alts are correcting. And zooming out on the monthly, virtually still everything in the green. Many of these alts up hundreds of percent, like HBAR 426%, Aave 110%, Chainlink 108%, Sandbox 174%, XLM 255%. Massive gainers across the board. Checking out the Crypto Greed and Fear Index, we did step down some. Yesterday was in 83 extreme greed. Today 76. Last week was 72 and last month in 84 in extreme greed. And checking out the time chain calendar, you can currently exchange one US fiat monopoly dollar for 990 sats, so sub 1,000 sats, just as I predicted. Let's go. Let's break down our technical analysis, aka astrology for the broskies. We'll also be pulling up some of the live charts, and I'll be sharing some bullish price predictions with you as well. Let's go. Corporate execs are selling their stock shares at unprecedented levels as the biddy continues to sustain above 100 Gs. The corporate executive stock sale ratio reached a new all-time high of 6 sellers to buyers, according to the Financial Times. The Kabisi letter shares here that the corporate executives are now selling their stock at record levels, with the ratio of sellers buying hitting 6x. I mean, look at it right here. Charts don't lie. The record amount of the sellers in the traditional stock market comes after Bitcoin reached the record 100,000. So here we go. That was on December. Actually, we hit the all-time high December 4th, I remember, which is currently 104, and we've been flirting with 100,000 ever since. Now, unfazed by the growing selling in traditional stocks, Bitcoin's year-to-date performance returns surpassed 127%, and the Bitcoin rose above 13% during the past month. That's right, Bitcoin's 127% returns outperform most traditional asset classes this year, and we're still in the thick of it right now here in Q4, December family. Bitcoin's historic 100,000 milestone saw Bitcoin outperform most global assets such as precious metals and the top stock market indexes. As of today, December 13th, the Bitcoin price surged by 137% year to date. Not too shabby there. While the oil fell 0.09%, the S&P rose 28%, and gold price increased by 29%. So I proposed the question. Do you prefer 137% year-to-date gains or 29%, Peter Schiffmeister? And guess what's going to happen when Bitcoin demonetizes gold? Gold is going to continue to go down. Bitcoin's going to go up. Forever, Laura. Now, fueled by the improving macroeconomic conditions and interest rate cuts in Europe and China, Bitcoin could breach 160 Gs next year, leaving out 60% upside from the current price tag, according to Matrix report. However, the U.S. Fed's upcoming interest rate decision is December 18th in 5 days, which could significantly impact the Bitcoin performance for the rest of the year. Let me know how you feel that will likely impact the price action. And based on Bitcoin's correlation with the global liquidity index, the Bitcoin price will reach $110,000 local top in January before the temporary correction of 70 Gs. By February, I mean, that's all speculation at the end of the day, but nonetheless, growing inflows into the Bitcoin ETFs could also contribute to the Bitcoin momentum. We have unprecedented Bitcoin inflows. Also, the U.S. spot Bitcoin ETFs attracted almost $5 billion worth of inflows during the past 11 days. Hey, divine number there. Leading up to December 12th, according to So Value. And in breaking news, Argentina's President Javier Milei is planning to allow Bitcoin payments in 2025. Maybe Bukele is rubbing off on him. And also in breaking news, publicly traded company Riot buys an additional 5,117 of the Biddy for $510 million. Yeah, just another $500 million buy. Nothing to see here. And checking out the live chart action, Jackson. I'm going to pull up some of the live charts for you guys. Welcome, everyone, joining the live stream. You can see Bitcoin still flirting above 100,300 at the time of the live. This is via Coinbase, via TradingView. This is the 1 minute chart. We do have a rising wedgie. Zooming out, we'll go to the 1 hour and we'll work our way back. The 1 hour shows you a rising wedgie as well. You can see big green candle we had, then it was a big red candle, and we're forming another green candle at this time. And zooming out from the 1 hour, check out the 4 hour. Let's see if we have any bullish targets here. We do. A rising wedgie as well with a bull target, bullish pennant of 108,000 for the King Crypto. And zooming out from the 4 hour, take a quick look at the 1 hour. The 1 hour chart says it's going up forever, Laura. Precisely. Thank you, Michael. And yeah, as you can see here, red candle for the day is forming, but it's still early. It's still young. It's Friday. Tomorrow's SATS stack and Saturday. Let's see if we get a weekend pumpy pump so we can pump it up. And zooming out on the weekly, I mean, we did have the highest weekly close on Sunday, and it looks like the way things are going, we're going to outperform that and have yet another. Yeah, I mean, look at the staircase on the weekly. We also have the $124,000 cup and handle target in play. Couldn't be more bullish. And zooming out from the weekly, take a quick look at the monthly. Monthly chart says, obviously, Moonvember was the best candle we've ever had in Bitcoin's history. It went up almost 30,000, and we're already forming another green here in December, and December is still young. We got 2 weeks yet to go until we put a bow on the year of 2024 as we enter the dragon, like 2025 Bitcoin year of the dragon. You already know, fam. So there you have it. Here's the latest with Texas. Texas lawmaker proposes the bill to establish a strategic Bitcoin reserve. Get used to hearing this term, strategic Bitcoin reserve, because that's what Trump is going to establish with Cynthia Lummis as as POTUS of the United States of America. And that's what Texas is going to do and doing. That's what Florida is going to do and doing. Wyoming and all the states. There is a hash war right now. We call this the game theory. Everyone racing to make this Bitcoin strategic reserve happen sooner than later because no one wants to get left behind. Everyone wants the first mover's advantage. But guess what? Bukele is always going to be number one when it comes to the earliest adopters at a nation state level, being they're the first to adopt the Bitcoin as a legal tender back in 2021. Now, a lawmaker in the Texas House of Reps have drafted legislation to create the Bitcoin Reserve as part of the state's treasury in a bill tentatively named the Texas Strategic Bitcoin Reserve Act, filed by the state government December 12th, which was officially yesterday. Representative Giovanni, my paisano, proposed the comptroller hold Bitcoin as a reserve asset for at least 5 years. Why so bearish? The legislation suggested Texas residents or governmental entities could voluntarily donate their Bitcoin to the reserve. But in contrast, the proposals about national Bitcoin reserves did not mention any crypto potentially seized by the authorities. That's right. Quoting them here, the advocacy group, the Texas Blockchain Council, no taxpayer funds will be spent on buying Bitcoin in order to maximize the chances of the bill passing. The Bitcoin will come from donations from Texans, U.S.-based companies, and other sources $1,000 of existing state resources. According to the text of the draft HB 1598, it would require 2/3 majority in the Texas Senate and House to pass. The state legislature is not scheduled to return until the start of the 89th regular session on January 14th. Now, similar proposals for Bitcoin reserves in Alabama and Pennsylvania. That's right. The Texas legislation followed bills proposed or introduced in different U.S. states after the 2024 U.S. elections, which resulted in Republicans winning the presidency and the majority of the House and Senate. Trump promised to explore establishing the strategic national Bitcoin stockpile during his presidential campaign, and his sons have all just recently doubled down on that, including Eric Trump at the Abu Dhabi event that just passed, and he is calling for a $1 million Bitcoin price action Jackson, baby. A Republican lawmaker in Pennsylvania was one of the first to introduce the bill for the Bitcoin reserve, modeled after the proposal from the advocacy group, the Satoshi Action Fund. Shout out Dennis Porter. Let's freaking go. Game theory in full effect. Next story of the day, we did the Texas story. Now let's discuss Team Trump with the new chairman of the SEC. According to the headlines here, it says Trump team seek way to slim or abolish the banking regulators. This is according to the Wall Street Journal. Trump's U.S. presidential transition team is reportedly exploring whether the incoming administration can slim down, lump together, even do away with some of the banking regulators. Advisors to the president-elect from Musk-led Department of Government Efficiency has asked in interviews with potential bank regulators if a president could, for example, abolish the Federal Deposit Insurance Corporation, which we all know as the FDIC. People familiar with the matter told Wall Street Journal on December 12th in the report, Trump's advisors have also queried potential appointees to the FDIC and the Office of the Comptroller of the Currency if bank deposit insurance could be folded into the Treasury. Plans to combine or overhaul the FDIC, OCC, or the Federal Reserve has also been floated. The Republican majority Congress would decide whether the FDIC or any of the other agency is to be eliminated, a complex and rare undertaking. Now, Trump, meanwhile, is cleared to pick a successor to replace outgoing FDIC chair Martin Grutenberg, who said last month he would retire January 19th, the day before Trump takes office. Wild, right? Now, Representative Tom Emmer has accused Gruenberg of being the architect of Operation Choke Point 2.0. Oh, now it makes perfect sense. I believe Tom Emmer. So screw you, Mr. What's the guy's name? Chairman Martin Gruenberg. What are you related to? What's that girl who always preaches climate change? What's her name? I forget her name, but I can't stand that lady. Nonetheless, the reported talks Greta, that's her name. The reported talks seem to underscore Trump's promises of deregulation and massive government spending cuts, an initiative tasked the Musk and failed GOP presidential candidate Vivek Ramaswamy to co-lead the Doge movement. Last month, Musk wrote there are too many duplicative regulatory agencies. He also called to delete the Consumer Financial Protection Bureau, which was created in the wake of the 2008 financial crisis and was caused by predatory bank lending and the lack of regulatory oversight. The Journal's report came the same day. A Washington, D.C. federal judge in a Coinbase-backed Freedom of Information Act suit criticized the FDIC for heavily redacting so-called pause letters it sent to banks. The FDIC was told to make more thoughtful redactions, refile the letters by January 3rd, and be prepared to defend each new redaction. The letters showed the FDIC asked 23 financial institutions about their crypto-related activities, with some detailing that the agency had asked firms to pause all crypto asset-related activity and refrain from providing or expanding crypto products or services. I mean, Operation Choke Point 2.0 was very real, and obviously Biden had a war on crypto. He still has a war on crypto, and not until the day all these lizard folk leave office will we see a big change. That's the one, Greta. That's the one. The Grinch. Greta, the Grinch that stole Christmas. Thank you, Greg. Next story of the day, fam. BlackRock says 1% to 2% is a reasonable Bitcoin portfolio allocation. BlackRock, as we know, the world's largest asset manager, said up to 2% is reasonable for investors who wish to hold Bitcoin, according to their new report. The report, which was shared and first reported by Bloomberg, says 1% to 2% is a reasonable range for Bitcoin exposure, but cautions that larger allocations would sharply increase Bitcoin's share of the overall portfolio risks. Now, 1 to 2% Bitcoin allocation poses on average about the same share of an overall portfolio risk as a typical allocation to the Magnificent Seven group of mostly mega cap tech stocks in a portfolio comprising 60% stocks and 40% fixed income assets. According to BlackRock, the Magnificent Seven includes companies like Amazon, Microsoft, and Nvidia. BlackRock manages roughly $11.5 trillion worth of assets. It also sponsors the largest spot Bitcoin ETF, which we know as IBIT, which currently holds roughly $54 billion worth of Bitcoin. But to be more accurate, Coinbase is the custodian, not your keys, not your coins, Larry Fink. Get with the program. But according to BlackRock, investors need to think about Bitcoin expected returns in a different way. It has no underlying cash flows for estimating future events. What matters is the extent of adoption. Quoting them here from their report, Bitcoin may also provide a more diversified source of return. According to BlackRock, we see no intrinsic reason why Bitcoin should be correlated with major risk assets over the long term, given its value is driven by such distinct drivers. They're ultimately trying to tell you, save some bitty for us because we want all the bitty in the world. That's how I translate this. Longer term, Bitcoin could potentially also become less risky, but at that point, it might no longer have a structural catalyst for further sizable price increases. That's false. We all know it's going up forever, Laura. But again, they just want more of the Bitcoin to themselves. I'd expect nothing less from the Finkmeister. Instead, investors may prefer to use it tactically to hedge against specific risks, similar to gold, they said. The report dubbed Sizing the Bitcoin in the Portfolios was released by BlackRock officially yesterday, December 12th. Now for some of the price catalysts launched in January. Spot Bitcoin ETFs emerged as 2024's most popular investment vehicles, breaking $100 billion worth of net assets just in Moonvember. Now these surging inflows from the institutions and investors can cause demand shocks next year, driving up the Bitcoin spot price according to a December 12th report by Syngum Bank. And that's right, there's a supply shock. We have the least amount of available Bitcoin on the exchanges right now. Our analysis shows how even relatively modest allocations from this segment can fundamentally alter the crypto asset ecosystem. Now, here's what I want to remind you of. They may be preaching 1 to 2%, but I'm not going to forget. We've covered it on the pod numerous times over the years. Maybe a couple of years ago, they released a report suggesting was it like a 49% allocation or 59%? I don't remember the exact number, but it was roughly half your portfolio they were saying should be in Bitcoin. Now they're saying 1 to 2%. So be it. I think they just want more biddies for themselves. What are your thoughts, family? Let me know. But anyways, let's first discuss this $160,000 target. Then we'll discuss Michael Saylor doubling down, insisting Bitcoin to 13 million and why that's likely. And then we'll dive into our live Q&A. Welcome everyone just joined the live stream. It's hunting season. JV's hunting biddies and bears. Game on. So a headline here reads, Bitcoin could hit 160,000 next year, fueled by the improving macro conditions. That's right. We may surge to 160 next year, bolstered by improving macroeconomic conditions, easing global monetary policy, according to the latest report from Matrixport. Bitcoin surpassed the 100,000 high for the first time. Man, why are they so inaccurate with Cointelegraph? I'm sick of seeing the day wrong. They keep saying it's either the 5th or the 6th. We saw it on the 4th. We had 104,000. Jeez Louise. But anyways, I digress. In a bullish signal for the Bitcoin price, the European Central Bank lowered its key interest rates by 25 basis points to 3% December 12th in an effort to increase investment and economic activity in the region. The People's Bank of China also decided to cut the benchmark one-year lending rate by 40 basis points to 5.6% November 21st. It's the first rate cut in more than 2 years as the economy has slowed. Jag Cooner, head of derivatives over at Bitfinex, noted the global trend of easing interest rates may drive investors towards risk-on assets like the Bitty. This dual easing could spur the capital flows into the risk-on markets, including crypto. Combined with traditional optimism seen in December markets, this may fuel a potential Santa rally. I call it the Nippinator indicator, driving Bitcoin and other cryptos higher as investors allocate more capital into the space. Now, the Fed's forthcoming monetary decision is, as I mentioned earlier, on December 18th in 5 days. It could significantly impact the Bitcoin price trajectory until the end of the year. Here's the report published by Matrixport. You can see it dated December 13th, which is today. Bitcoin 2025 target 160. I believe that's extremely bearish. I'll dare say we still have the potential to hit 160,000 in the month of December. And my target for 2025 bull scenario is 1.1 million. Max Kaiser's target, he just upped 10x. And if you missed yesterday's pod, check it out. He says 2.2 million, virtually double my prediction. But let me know your thoughts. The dynamic could bolster the Bitcoin price over 160,000, according to the report. Quoting them here, our projections indicate that Bitcoin could reach 160, representing a 60% upside. This target aligns with sustained demand for the Bitcoin ETFs, the evolution of the macroeconomic environment, and the expanding global liquidity pool. Bitcoin investors eagerly await the U.S. Fed Reserve's policy here in a few days. The odds of a 25 basis point rate cut are currently at 97%, which means it's inevitable. They're going to cut the rates again, which is always bullish for risk on assets like the biddy. Now, an interest rate cut by the Fed would help Bitcoin finish the year at record-breaking levels, agreed. Lower interest rates typically reduce borrowing costs, encouraging greater risk-taking, 100%. Cryptos, as high-risk assets, often see inflows during such periods of increased liquidity. Additionally, the psychological boost from a dovish monetary stance can improve investor sentiment. The Bitcoin price is poised for further gains following a 1.7 billion reduction in leveraged trading positions. December 9th, Kuhner said the deleveraging sets the stage for the next market rally. Adding excessive leverage long positioning has been removed, creating a foundation for the next leg up for the Bitcoin price. And in trading, leverage refers to the amount of borrowed funds used for trading positions. November 12th, the CEO of Crypto.com warned that the crypto market will need deleveraging before it can breach 100, nearly a month before Bitcoin crossed the six-figure price tag for the first time. And it won't be the last. I mean, for Christ's sake, we've been testing 100,000, it seems like 10,000 times in the past week. Now for our feature story of the day, fam. Michael Saylor doubles down and insists Bitcoin will reach $13 million per coin, meaning it's going up forever, Laura. He's not exaggerating. Now, JV, before I get into Michael Saylor's prediction and his latest from his most recent interview, my base case is 420. I'm a little base, but it's 420 for the broskies. My bear scenario is 1.1 million. I'm sorry, my bull scenario. My apologies. I ripped up my bear scenario of 250. I just don't see it being bear scenario, considering Trump is going to make a strategic Bitcoin reserve for the United States, and with nation state adoption and empires and sovereign wealth funds and pension funds, I just can't see the bear scenario. So my bull scenario is 1.1 million, and then Max Kaiser came over the top more recently and doubled my 1.1 million, and he's calling for 2.2 million. I believe Max. If he said it, I believe it can happen, because he's the high priest. He started preaching about Bitcoin when it was a quarter, 25 cents, like back in 2009. So if anyone knows, it's going to be Max. Some say he's Satoshi in the flesh. Some say his Bitcoin stash rivals that of Satoshi. What are your thoughts on that? And shout out to the high priest of Bitcoin, Max Kaiser. And what do you think about 2.2 million? He tenfolded his original prediction of 220 because of all the bullishness. And his main argument for the 2.2 million is Bitcoin demonetizing gold and the speculative attack that the central banks and countries around the world may do, selling their once precious gold into Bitcoin, demonetizing the precious metal, sending Peter Schiff to the crazy house, and sending Bitcoiners to the moon to celebrate. But with that being shared, let's break down the latest from the Giga Chad, Mikey Saylor. That's right. Doing a recent appearance on Charles Payne's Making Money. I believe that's on Fox. He outlined MicroStrategy's investment approach, describing Bitcoin as a transformative digital asset. Saylor elaborated on MicroStrategy to acquire Bitcoin by leveraging financial tools such as convertible bonds, which target two distinct investor profiles. Low-risk investors are drawn to the bond's limited downside James Bond exposure, while high-risk investors favor the potential for the outsized equity performance tied to the bitty growth. Pretty little bitty going up. He emphasized the volatility, often seen as a drawback, serves as a key operational driver for MicroStrategy. And according to Mikey Saylor, this approach bridges traditional financial markets with the rapidly evolving crypto economy. Saylor addressed the criticism that labels the strategy speculative and unsustainable. He countered that issuing securities to meet diverse investor needs aligns with the public company's core purposes. Additionally, he likened the Bitcoin adoption curve to the historical technological breakthroughs like electricity and automobiles, and even fire like Prometheus. I remember that from the speech, asserting that initial skepticism is a natural response. It's natural to be skeptical. Of course, the mainstream's been lying to you virtually every day. Your school teachers have been lying to you every day, whether they know it or not. And everyone's been lying to you since the inception, since you came out of your mother's womb. Of course, you're going to be skeptical. But anyways, central to Saylor's argument is the notion of Bitcoin as a revolutionary form of digital capital. He identified its unique attributes such as portability, programmability, and resistance to centralized financial risks. Saylor highlights the potential for wealth storage at unprecedented speeds, making it particularly valuable for economically unstable regions. He positioned Bitcoin as a viable alternative to traditional assets like real estate or fiat, which are vulnerable to inflation and centralized manipulation, monopoly, tulip mania. Saylor further projected Bitcoin's exponential growth, estimating the asset class could expand from the current $2 trillion valuation to $280 trillion by 2045. So he's ultimately saying we hit that 13 million price target by the year 2045 when we have a market cap of 280 trillion. I personally think Bitcoin will be way more astronomical than 13 trillion with a 280 trillion market cap. What are your thoughts on that? Notably, Saylor is not making this bold 13 million price forecast for Bitcoin for the first time. It started back in September during the appearance on CNBC's Squawk Box. He declared this target and has continued to maintain his position on the outlook. Virtually, Bitcoin would need to increase by 13,000% to reach 13 million from the current price of roughly 100 Gs. Now, regarding pitching Microsoft, Saylor presented Bitcoin's benefits to the Microsoft board of directors, I believe twice, urging the tech giant to consider adopting Bitcoin. He characterized Bitcoin as the next wave of the digital transformation, suggesting the integration could enhance the Microsoft financial strategy. But we all know Bill Gates is soft. Saylor argued that by leveraging Bitcoin, the company could mitigate the risks linked to traditional capital management. Long story short, they denied it, and apparently they're not adopting Bitcoin. But guess what? Who are the primary shareholders of Microsoft? Vanguard and BlackRock. BlackRock already has like over 500,000 of the Bitcoins. So don't get it twisted. What companies that are mega giants may adopt Bitcoin? We have Apple, there's NVIDIA, and there's plenty of others out there. I think the more that likely do it, the more others will likely follow in their footsteps. They don't want to get left behind. We have Michael Saylor via the Saylor put, virtually borrowing money at 0% interest, purchasing billions of dollars worth of Bitcoin. It feels like every week. And he announced an oath that he's going to purchase $42 billion worth of Bitcoin for MicroStrategy over the course of the next 3 years. Their goal is to control 5% of the circulating supply. They already control 2%. So they're well on their way. And if I'm to believe somebody, it's going to be Michael Saylor. He puts his money where his mouth is. All he does is buy Bitcoin. He says he's going to continue to buy Bitcoin at the top. He's going to continue to buy it at $1 million. He's going to continue to buy it at $10 million, $20 million. He's even made bold predictions with Patrick Bet-David. The Bitcoin's heading to $100 million. $100 million per Bitcoin. Send it. Let's get it.